What's up YouTube? This is Power Surge, and this is Buffy. We're back. I just want to make a video for y'all today about managing risk with penny stocks. Penny stocks are super risky and you need to be careful. You need to have a strategy set up so that you don't take too many losses if you make a mistake or if you get caught up in a bad trade. So for myself, I personally don't like to take a loss of bigger than 15 or 20%. So if I'm in a penny stock and it goes down, the trade doesn't go the way I planned it, at 15% loss, I try to sell out. Sometimes getting your money out at a good position is not easy, but you must make sure you exit a position before taking too many losses because penny stocks are super volatile and you could lose all of your investment. I must give credit where credit is due to Clay Trader. Clay Trader has a YouTube video about managing risk, which I found very helpful, but I wanted to expand upon it a little bit. I'll leave a link to Clay Trader's channel in the description below. He has a lot of videos that are tips, and he offers some online classes that can really help you get going and understand the market. They're pretty inexpensive, about $100, and really worth it. They will save you a lot of losses by going through and learning that information and getting trained to play in these markets. So I choose to sell after a loss of 20% or a huge obvious mistake. Mistakes can happen trading, and you need to correct them right away when you do something that you shouldn't have done. So here are some consequences of not correcting your mistake and holding the stock for a longer time after the trade doesn't go as you planned. Like I said earlier, further waiting to sell could destroy your account. This one bad trade could drag your account all the way down so that you lose a huge amount of money, and that's what we want to avoid here. So let's say you have $1,000 in a stock and it goes down 20%. Well, if you wait a couple more days and don't sell, imagine that stock goes down 50%. You would have only lost $200, but now the stock has continued to go down, you've lost $500 by not selling. Now let's say it goes down even more, now you've lost $650. So by not taking an initial 20% loss, you've lost an additional $450. You've lost a lot of additional funds on top of that $200. So you can see why taking a loss right away is super important. The next thing is that your funds are going to be stuck in that trade. If you have a small account and you don't withdraw your funds from that bad trade and you let that stock take you down with it, then it's going to eat up the money that you could have had for another trade. So you have lost income because you're not using those funds in a positive way. They're not making your account greener, they're making it red each day that you've held it. This waiting also causes you stress. You have a stock that's tanked and you don't know what to do with it. You're not sure, should I sell now? Should I wait till it comes back? And all this stress kind of compiles on your life and makes you not trade as well because you're not thinking without emotion. What you usually don't want to do with penny stock is think, I'm just going to wait a few weeks, a few months, and I'm going to see if it goes back to that price and then I'll sell it. Unless you are 100% sure that it's going to go back to a good price where you can exit safely and save a little bit of money, you should probably exit right away after the trade has gone wrong, rather than wait and hope that it comes back. Holding onto a bad play can make you lose most, if not all, of your investment. The longer you hold these penny stocks, the longer you're at risk for something like the SEC halting a stock or halting a similar stock in the same sector or category, which may drag all the other ones down with it. So if you hold a penny stock for a super long time, that's another risk that you have. There's occasionally restructuring of penny stocks, which generally does not work in the favor of the penny stock or bag holder, where the amount of shares changes and the price changes, but many times it can mean that you lose all, if not most, of your investment. And finally, name changes. If you hold a stock for a very long time, a lot of penny stocks will change their names. And when they go through a name change, it's going to cost you $20 as a fee most of the time. And sometimes their name change will go 2 or 3 times within a few months, and your broker will charge you the $20 fee over and over again. So that's an additional fee that you're going to pay by holding that bad stock or that bad trade. So these are all reasons that you should really correct your mistakes and take a loss that is small rather than holding on to it, taking a loss that is big. You don't have to stress about it. You'll save the future losses that you might have incurred. You'll have the funds available for good trades that you can make. You won't have to be worried about the SEC coming in and stomping on your stock one day, or fees, or having the whole thing just be restructured and changing value overnight. That's all I've got for today, guys. Thank you so much for watching. If you've enjoyed this video, please feel free to share it, leave a comment. Be very careful when you're trading. Make sure you manage risk and correct your mistakes very quickly. Good luck, and as always, have a great day. What is it now? What are we gonna do? You're so boring. Why
you some sleepy little things.